Joining us now, Peter Bernstein, an instructor of economics at DePaul University and a vice president of RCF Economic and Financial Consulting. Chicago native, welcome to the studio. Thanks for being here.
Thank you.
This can seem overwhelming, right? You talk about inflation, there's a feeling about how things cost. How do we interpret this data that just came out and how it impacts us at home?
Sure. Well, the CPI, which is the measure of inflation that people typically look at, is a broad measure of prices across the economy. And for the last 12 months, prices rose on average 2.7%. That's a mix of some things going up, some things going down. That's a bit of an improvement over last year. December 24, prices were up 2.9%. So we're moving toward that 2% goal, but moving quite slowly toward that goal. And it's still putting upward pressure on people's budgets because prices continue to rise a little more than the Fed would like, and obviously more than most people would like.
Right, and that impacts this term affordability that we keep hearing so much about, and whether that's your groceries or your electric bill or your mortgage, people feel the pinch, certainly out of the holidays. How does that play into what we're seeing with these numbers?
Right, well, you know, when people think about the affordability, I think a lot of people say, I just wish things would be 10% cheaper.
Of course,
right?
More than that.
But, right, exactly. But you see, that's not going to happen realistically. I mean, some things, but across the board. I mean, what the Fed looks at is low inflation. Low inflation means prices go up a little bit, but not go down. There's no expectation that prices are really going to, across the board, fall by any large amount. So that makes the affordability problem quite difficult. And it actually means really what you need to do is earn more money. I know that's easier said than done.
Not save more, earn more.
Well, yeah, earn more. I mean, ideally, you can earn more and spend more and save more. But the challenge there is doing that. That's the solution. It's not an easy solution. But I don't think you're going to see this big drop in prices. Some prices may fall, but on average, prices are probably going to rise over the next year.
All of it, Peter, seems interconnected, right? You've got the stock market and you've got the new CPI numbers. You've got all this news with the Fed chair and Jerome Powell coming out, and then people talk about rate cuts. I mean, how does that influence the decision of the Fed to cut rates?
Well, the Fed, I think, is in a wait-and-see mode. Partly that's because there's been, you know, a sort of a data gap with the government shutdown, and both in the labor market and in this inflation market. So I think they're going to hold interest rates where they are for now, and that's the expectation, until they get a little more clarity on what's happening. My thinking is that they are not going to be very aggressive in cutting rates until they see more evidence that inflation is coming down to that 2% goal that they have, unless the labor market starts to deteriorate. The labor market's not great, but it's not bad. You know, it's maintaining itself. So I don't think there's any sense of panic from the Fed that the economy is going to fall apart anytime soon. So I think it's going to be a wait and see for the next several months.
And on your point of earn more, right? Easier said than done. I mean, one, you can ask for more as an employee, but employers, what are you seeing? What markers are you looking for in that market? Are companies willing to pay more?
Yeah, well, you know, they're willing to pay some people more, but but I think we're in this sort of what they call the no hire, no fire labor market.
Like a holding pattern.
Right. So companies aren't laying off people, but they're not really aggressively hiring. And the problem with that is it's difficult for workers to really command a big pay raise. A few years ago, during what was called the Great Resignation, people were job hopping. Companies were offering, you know, bonuses and higher pay to people. They were looking to, you know, ramp up employment after the pandemic when employment fell a lot. That's not happening now. So, you know, people tend to be a little less aggressive in their job demands because they want to maintain, they want to hold the job that they have.
Right, yeah.
And so it's a challenge.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.